Hey traders, this is Ron Haydat, Market Tamer. Happy Monday. Hope you had a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues. Should always be addressed with your financial advisor. We'll start here with the Dow ETF, the diamonds. We did try to trade higher today, but we're stopped cold near the 5-day EMA in blue, and we finished at the lows of the day. So the commentary from last night, Sunday night, to today, nothing has changed. We didn't have that big of a move. We're still below the 5-day. That means the 5-day outlook is still bearish. If we were to get above the blue line, short-term outlook would be bullish, and the target would go back up to the 20-day and 50-day, right around 260. But we're still bearish. If we break the 200-day, we then come back to the swing low from late June, early July, which is down near 240. If I go to the SPY, which I do have a bullish position in, got close to the 5-day, rejected again. And in fact, if I do this, you can sort of see what's going on here. There's a little bit of a pennant forming, and I think when we break out of this little pennant, we'll get some clarity. If we break to the upside, target 20 and 50-day up around 285. Break to the downside, there's a little support here just under 270, maybe 268. I don't know if that's going to work. The next major support starts down towards 260, which is in line with the Dow if things really get ugly. If we take a look at the Qs, down over 1% today, but they played ping pong with the 5-day EMA in blue and the 200 SMA in purple, that institutional moving average. Volume was, nice, really good today, actually, from a bearish perspective, nearly 65 million shares. If I zoom out, this was the previous support level, which we're sort of holding. Then we start coming down here. Again, that aligns with Dow and the S&P too. We're still below the 5-day, folks. This one here too is bearish. The IWM actually finished up on the day. We got a doji, 0.37% was the rise, but we're still below the 5-day. We're back inside the lower Bollinger Band, so the oversold conditions are definitely gone, but we're still bearish, even with today's little bounce. And considering how far we've fallen, today wasn't much of a bounce at all. The major support's down in the mid to upper 140s. There's a little bit right here where it's stopping, 152-ish, but that's your next support level down there. So again, outlook still remains bearish for this week, technically speaking. Here is NFLX. Now they're due to have earnings due to have earnings tomorrow after market close. But we have expiration for the monthly coming up this Friday. So it makes a really interesting situation. If I go to the trade screen inside Thinkorswim and I use Netflix, and if I use October options, right now the stock finished at 333. If you look at a call and a put, which would be considered a straddle right at the money, it's pricing out to be about 32, 33 bucks. That's exactly what the expected move is. Also $33 according to Thinkorswim. That's a 10% move from where the stock is sitting right now. If you go back and look at some historic movements on Netflix, just going back to January, 10% pop, 10% pop, 10% drop. Maybe we're going to get another one here. If it's more than 10%, those options could really appreciate in value. One will get destroyed and be basically worthless, and the other one's going to have a lot of value. However, if this stock does not move at all, let's say it merely jumps $5 up, $5 down or something, be considered a non-move event. Then you're talking about this option here and this option here, this one, both crashing. They could lose as much as half their value or more in one day. So if you wanted to practice a paper trade for earnings, the expected move is 33 bucks. It's about 10%. And that's on average what it moves. So there's no benefit here, in my opinion, trying to pick a strangle as a trade idea, because that is the expected move, 10%. So what's the upside? It would be nothing. The options will end up pricing out close to what they are today, maybe worse if the bid-ask spread widen. But if the stock goes more than 10%, if that was the expectation, this could potentially pay off nicely. And if it doesn't move as much, it could be a disaster. So great paper trade idea. Put this in a fake account and see how it plays out. And if we get that 10% move, and we can revisit it either tomorrow night or most likely Wednesday night, because they're going to have earnings typically after the bell. All right, that was Netflix. PM is another stock that is due to have earnings. And that's going to be coming up here on 10/18 before market open. So you really have tomorrow, which is Tuesday and Wednesday, to consider something on PM before the earnings announcement. 85 bucks is resistance. Then you have support, ballpark, mid-70s. But here's the thing. If this company has a good report, and hopefully it doesn't gap up too much, and it just pops above this little double top here, the next major technical target would be a gap fill up near 100. That could potentially be trade worthy. However, if it gaps a little bit to the downside, as you can see, you're talking about support here and then more support there. It's a little more choppy. But if this thing breaks 75, let's say it has a really bad reaction to the report, below 75, then it gets down into the low to mid, or I should say mid 60s, 65, 66 is a target. So we'll see how this one plays out. Just keep that on your radar. Now TLRY, TLRY, pot stock. I keep getting questions about these. TLRY was up 11+% today, a little bit of a pickup in volume. It did close over the October 1st high. Its next target is up in here, the low 200s or those previous closing highs. The thing here, like I said yesterday, the trailing stops could be a disaster just waiting to happen, but it did break out, and just careful. But yes, TLRY did break out today is the answer. NVIDIA, having a tough time of it. This stock does enter another seasonally bullish period here real soon. It closed the lows of the day today. We're right back on that support from July. Next support's down around 215-ish, and then all the way down in the upper 200s. But right now, NVIDIA is definitely bearish on the daily chart. How about Adobe, another stock that has a rock star period of time at the beginning of the year. Right now, once we get in towards the end of the month and into November, there's a slightly bullish period, but it's still not the rock star window. It's into a support zone, just where it was back on Wednesday of last week. If the 200-day falls on Adobe, then you're coming back into the 210, 220 area. And then Apple will do another tech stock. There was a report out today I saw on Zero Hedge that talked about there was, I guess, weak demand in China or something. So Apple dropped 2% as a result, I'm guessing because of that news, but tech was also down in general. If I zoom in real close here, we're just hanging right around these support levels at 215, 216. The gap filled down at 190 would be the target, and that's right where the 200-day moving average is. In order for this stock to resume its bullish technical trend, we need new all-time highs. So heads up here on Apple. And oil stocks, certain ones are getting whacked. Here's Occidental, OXY, 6+% today, blew through support at 75. The next support zone, 65 to 62.50-ish, 10% more of potential downside. It is oversold on a daily basis, but it's just not looking good. How about Valero, down 4+%, cracked the 200-day moving average, broke support from July. Next target is 95 to 90. You can make an argument that's 10% down. You look at ExxonMobil. This was only down 69 cents, but it had a bad couple days last week. Target 77.50, 75, and then 72.50. And last is Chevron, also bad last week, 115 support, and then you sort of have a range down here. But if you were to compare the two, OXY and VLO, much more downside than XOM and CVX. But regardless, these oil stocks are taking it on the chin right now. That's it, folks. Let's see how expiration monthly week plays out. Earnings season is going to start ramping up in a big way, and we'll watch Netflix and PM this week in particular. Have a great day, and I'll see you tomorrow.